Welcome to the Cardone debates. We have some very interesting guests today. Can you all see everybody? Anyway, we have Jerry and Dustin taking the diversification side and the all-in on crypto with Gary and Mitch. So this is are you all in on crypto or are you team diversification? So first we're going to go around and I'll introduce ourselves. You guys know Gary and Dustin. We'll let them introduce themselves anyway. Dustin, you first. Give us a background on you.
What's up, everybody? Your favorite champion debater here. Looking forward to the bloodbath that is coming. Me and Jerry are going to stomp the other team today. It's going to be amazing.
All right, on Dustin's team, we have Jerry. Jerry, introduce yourself.
Jerry Katz. How are you, everybody? I'm Mr. Diversification, ex-Wall Street guy. Even worked for the famous Wolf at one point. But you name it. I'm Mr. Diversification, Mr. Wall Street, Mr. Bitcoin, Mr. Real Estate, and I love diversification. So I'm looking forward to crushing it.
Okay. Gary, what do you have to say about that?
I'm terrified. I am just so terrified. I am quivering in my concentrated boots.
You look pretty nervous. All right, Mitch, introduce yourself for us. Mitch is on Gary's team.
Yeah, well, I guess it's Jerry's introduction on Mr. Bitcoin then based on that. So, this is the first time on here, but I've background. I've been in the corporate world for the last 12 years, primarily in investor relations, exited that in April. Now I'm dedicating myself full time to the Bitcoin space.
Let's go. Welcome.
Go, Mitch. Go, Mitch. Hey, just a question or a comment here. Mitch and I do not want to debate crypto. We want to debate concentrated position on Bitcoin. And I'm not going to adulterate, Dana, the Bitcoin concept with crypto. So this is a Bitcoin, hey, what's too much concentration? Is concentration a good way to look at Bitcoin? And if not, why is diversity better? And now diversity could be in anything. You guys, I'm sure you guys agree with that, right? You'll take anything you can get if you think you can achieve a better risk-adjusted return. Good luck. Let's roll, baby. Risk-adjusted return. Who wants to go first?
I think we should let you guys want to make the concentration case first. Me and Jerry will respond.
Okay, let's go with that. Concentration first. Who's going, Gary or Mitch?
I leave it to my young friend here. You
before Sure, I'll take it.
All right, Mitch, you have 3 minutes. 3 minutes are starting now.
Okay. So the way I would look at it is you have a pool of different assets to choose from, right? Bitcoin being probably one of the smallest on the list at 2 trillion. The others being the bond market, the largest, over 300 trillion, real estate over 300 trillion, global equities, over 110 trillion, arts and collectibles. You have the gold market, 20 trillion. What's happening to those assets when you denominate the price of them in Bitcoin terms? What would happen if you were to measure the price of, let's just say, the real estate category, a single family house, going back from 2016, the average price of a 3-bedroom, 2-bath house in the United States, what is that costing you in 2016 in Bitcoin terms? What's that costing you in 2020 in Bitcoin terms? What's that costing you today in Bitcoin terms? Now go through the rest of the asset classes and do that. What's your favorite stock in the market, like Apple stock? Why don't you denominate their earnings in Bitcoin? How much are you actually making? What about the S&P 500 index? Try denominating that in Bitcoin. And once you do that and you see the charts, instead of if you're living in the fiat world or the diversification world where you think you're getting that lower left to upper right on the chart, it's actually the opposite way around. You're getting the upper left to lower right as it's collapsing in purchasing power in Bitcoin terms. So although because you're denominating your wealth in dollar terms, it looks like it's going up, but in fact, you're actually just using the wrong unit of account, which should be Bitcoin, the superior form of money. And then once you go further down that, it's It's what's the future of these assets. And yes, I would say you can go ahead, you can make the argument that we'll go ahead and increase in fiat terms. Sure, but that's not how you should be measuring your wealth. Um, and on that, so if you were to, going back to like the house example, if you were to continue to stack houses, where's the future appreciation going to come from? Obviously, as M2 money supply grows, money goes into the system, hard assets inflate. That's really the value proposition of real estate. But I would argue that the only reason people are buying rental properties is because the money is broken. They can't save in the money because they know they're going to get diluted, it's going to lose everything. So it's seek store of value in things like real estate. Now that in a world where a perfect form of money exists in Bitcoin, you will see people, and you already are seeing them. I was involved in real estate. I've sold off my rental properties. I don't want to deal with that. It's a horrible investment. Bitcoin. Why would I? It's a horrible idea to own a rental property. So you're going to see more and more of that, people that were formerly involved in real estate liquidating their properties, going into Bitcoin. And that's the same story across gold, across collectibles, across stocks, across bonds, is that the black hole of Bitcoin is going to suck out the monetary premium from these other assets. So that's why you shouldn't be diverse.
Okay, Mitch, time is up. Thank you so much. Who do we have for a response? Are we going to go with Dustin or Jerry?
I'm gonna let Jerry go.
All right, brother. All right, this is easy.
Jerry, you have 3 minutes. Let's hear it.
Okay, fantastic. So, I have an old saying, right? I'm an ex-Wall Street guy and I diversify everything. I don't want to be the one looking for gold. People that go for gold, guess what? They either go broke or they come home a billionaire, a million, or whatever. I'm the guy, I sell the shovel. I invented Levi's, right? And that's how I make my money because that's diversification. That's the key to wealth strategy and real risk tolerance, right? When you go all in on a new asset class or you're mining for gold, yeah, two things are going to happen. You're going to be the 1% that turns into a billionaire, or you're going to be the 99% that lose everything on the way up, right? And we've seen it over the last 15 years or so with Bitcoin. Why? Because first you have, the tech guys in there. Then you have, the people that are, I don't know, dark web guys in there. Everything's deregulated. Everybody doesn't know if they can trust it. Is it real? Is it not? It took us, hindsight's 2020, right? Like Mr. Mitch jumps in like, right, yeah, now ETFs are involved. Yeah, now we just passed the Stablecoin Act. Yeah, we did all this. Well, look at the last 15 years of what's happened, and I personally lost 14 Bitcoin in the FTX debacle, okay? And things of that nature. And again, when you're looking at masses and diversification, right? I believe diversification is the key to real wealth strategy. Now, yes, do I own Bitcoin today? Yes. Do I own $500,000 in MicroStrategy? Yeah, because I can leverage it and it's a stock and I can margin it safely. Unlike, the first go around where I lost 4% of my net worth and so on and so forth. So for me, diversification is the key to long-term wealth strategy. And that's what I mean. And another piece that you're not really discussing on the real estate side is if you have a high income, right, or you're a high net worth individual like myself and a lot of other people in this room, I don't pay taxes, guys, right? Whether it's on my income, my podcast, my YouTube, monetization, my insurance business, my real estate, because I'm classified as a real estate investor. I buy property at a 5 cap, making me 3-4% cash on cash returns. You want to know why? Because I dollar cost segregate it and I get $1 million in exact losses off my gains. So if you monetize that, if you put a chart to that, it's almost infinite returns. And I'm a part of the world where I say, buy, borrow, die. And then, so I buy a piece of real estate, I borrow against it, right? Then I refinance it. I dollar cost segregate millions of dollars against my income. I pay no taxes. And then I die and my kids or my estate inherits it, my family, and they get a new cost basis. So I don't think you've ever sat down and seen what tax savings does to an ROI or an NOI or a return.
Okay, things are heating up. We have a lot of really good, catchy. Jerry, this is a Bitcoin room, remember. Lots of people
I'm a Bitcoin
guy. Diversification. We have liquidate real estate and Bitcoin 8. All right, we have a lot of people who are anti anything with Bitcoin right now. So what we can do is we can go into a room where we have a discussion, or, and we're still figuring out the rules. Gary, you can have a rebuttal. What do we vote? Does anyone have any comments in the chat?
Well, I'm a little confused. What do you want me to do?
Yeah,
We either
We're going
have
to
a,
a small room. We're going to go to a small room and have a debate.
we're going to have a small discussion, or you have 3 minutes to respond, Gary.
I think me and
Look.
Gary should each get like 2 minutes.
Yeah, I don't need 3 minutes. I'll take a minute and a half. I think for the response. You want me to do the response, not my position.
Response. Jeannie, can you
Look,
do-
I think Mitch has presented for our side. I think that this conversation is about concentration, and look, Jerry talked about this is a 15-year. We've been here 15 years. I would actually build the case that he probably gave us the two biggest bones to chew on, which is one, the first 15 years. We're not talking about the first 15 years. We're talking about 2025 when the regulations are extremely clear. You have everybody and their brother on every continent deploying capital into Bitcoin. You have a 15-year-old decentralized industry, Bitcoin, which has the worst marketing and promotion. Hey, somebody's got a mic open. If you could mute it, that'd be great. We have, it's been attacked innumerous times. I don't think that conflating the past with where we are today is appropriate. And the reason I say that is in 2018, I would not have deployed 86% of my net worth into Bitcoin. It was immature. It was poorly marketed. The risk related to me buying $8,000 coin, I would never have done that. I have zero regrets over doing that. And I have zero regrets over buying $300 Bitcoin when Roger Ver was freaking out. So like these are mistakes that are not going to be repeated now. And then I can now look at the past of legacy assets and look at Bitcoin. This is an easy decision. Great wealth is not created diversified. It is created in concentration. Thank you.
Thank you very much. Dustin, you're up. You have 6 minutes.
So as always, one of the concerns that brings up to nobody here is arguing about the potential upside of Bitcoin and having exposure, right? So I want to defeat any attempts at straw man that anybody here is silly enough not to have some exposure to Bitcoin. So where I just kick that off.
The audience goes mad.
But when I think about diversification, this is one of the concerns I have with Bitcoin and the Bitcoin community in general, which is it is such a good investment and it is such a good opportunity and it has made people so much money that it is pushing us to exit other places of the economy where our skill sets and our knowledge and the values and lessons of Bitcoin need to be applied. And so if the question is, should you be all in on Bitcoin? I would ask whether or not we should be pulling people out or we should be using what we brought. Like it is incumbent on us to bring Bitcoin into other industries and into other investments. Gary's done it with his brother Grant. Look at the impact that bringing Bitcoin and into real estate has had as far as improving real estate for everybody and the long-term future of what that could potentially look like. If all we do is withdraw into Bitcoin, ultimately we are segregating ourselves out and denying everybody the opportunity of the lessons of why Bitcoin is such a good investment in the first place. The other thing I would add, we need Bitcoiners to continue to invest in themselves and in businesses and in the improvement of their communities. Withdrawing and going all in might be, you can make the argument that's best for your bottom line, but it's not best for society.
All right. Thank you, Dustin. So if anyone has any comments in the chat about, clarifications, we can go around and call on the rest of the guests here. Otherwise, we will be voting at the end on who has won this debate.
Well, actually, I would like to build my case for concentration. I just gave you counter to their little bullshit stuff, right? That they just mingle together, making no sense whatsoever. First question is, okay, may I start? Hit the old
3
counter.
minutes, Janie.
So I would implore the audience to let's just study history. And Alexander the Great, I'm pretty sure he was like single-minded. Well, he had two focuses. One, hammer as many women as he possibly could, and then hammer as many countries as he possibly could. So there's one guy that I do not think he was diversified in the least. Let's see, who's one of my great, who are the great artists in the world? Like, just think of an artist, high concentration, a little crazy. Did they leave us brilliance, or did they leave us a bunch of, mediocre stuff? I think they left us brilliance. Jimmy Page, Jimi Hendrix. Jimi Hendrix died when he was 28. I'd rather live 28 years like Jimi Hendrix than 100 years like most people live every day on their life. So for me, and I know that's not a financial position, but I also then look at Jeff Bezos, Elon Musk, every guy that's ever built a business, 1,000% concentration. Well, like in debt concentration, at the expense of their families, at the expense of their children, at the expense of themselves and their health, and the best years of their life, 25 to 45, 50, when they can actually enjoy the money. They spend massive amounts of time, like me, spend building 4 or 5 different businesses. Each of them take 10 years. I can now invest in Bitcoin and look at it. This is the global American dream. Every person can own their own business if you were to look at Bitcoin as more than an investment, but a business, a private equity play where I take fiat dollars from the system and I invested in a franchise called Bitcoin that has 400 million marketers. Okay, franchise that's growing. It only has 2% integration into the whole ecosphere, and I have the past 2.0, Web 2.0, the internet in 1998. I have history to look back and go, wow, who are the richest people in the world today? They're highly concentrated human beings. Okay, Ricardo Salinas, the 3rd richest man in Mexico, has an allocation near 100% now. He's older than I am. Okay, you cannot deny that diversification is used by people who have lost their thesis on what their conviction and their understanding what they're doing. And usually that diversification came from a farmer, a landowner, a guy like my brother who's as concentrated as you could possibly imagine, and in debt over it. So I think this conversation about concentration, it's misleading because great change is only ever created in that manner. I will end there, sir.
I want whatever Gary's smoking here. Right. The idea that our artists are somehow overly concentrated completely ignores people like Leonardo da Vinci, who brought us not just artistic expression and paintings, but inventions. The idea that Elon Musk is somehow 100% all in when he's going to space, he has a media company, he did financial payment structures. I mean, again, the whole idea
he wasn't diversified when he was doing PayPal, my friend.
Not when he's doing PayPal, but right now,
by the way,
he's also getting into health with Neuralink. Right, the idea that
but it's 20 years after he made his money, dude.
It doesn't make any sense.
After he's made his businesses, though, he built 2 businesses that generated him a great amount of wealth, and now he's spreading his wings. But you can't give me an experience where someone didn't concentrate one bet at one time to create it all. Jerry, not one story. Okay,
Listen, Elon Musk,
not a fucking diversifier.
I get it, but Elon Musk had no intention of rolling his entire fortune into Tesla. He got in way over his head, but he had the spirit of never giving up. And then he blew his whole bag, okay, and then got into debt and everything. I will agree with you If you want to be a billionaire, which is only what, 2,400 in the country, right?
3,500 of them in the world.
3,500 in the
3,500.
world.
By the way,
Okay.
which I think
Yeah.
less than 30 have been seriously invested in Bitcoin.
Right. But here's the
Ooh.
thing. If you follow Richard Branson, he says you build a business for a village, you get a village business. He rolled the dice on every disruption he ever had. He exited Virgin Cola, then Virgin Air, then Virgin Galactic. And then you're right, I've spent time with him. There's no diversification for that gentleman. He rolls the dice every time. And yes, you become a millionaire, you become Alexander Great, and you take on the world. So I made $4 million when I was 27 years old in the dot-com bubble on Wall Street. And in 6 weeks, AOL went from 104 to 1. And I had a $60,000 margin call and no more equity, wiped out after 7 years of working, selling the dot-com bubble, at Lehman Brothers on a 56K modem, selling something called Webvan, which the technology, today it's Grubhub. So it was so inflated. The technology exists today to run, Webvan or Grubhub. So I've been there. I lost my ass. And you're right. I don't want to do that again. So I started diversifying because I didn't want to spend 10 years because I didn't know where I was in the cycle.
Listen, it is a normal reaction for survival for man to make a postulate or decision based on pain. However, it does not make it a pro-survival activity because you're literally you're conflating an issue you had when you were a young man and probably in way over your head to this. This is not AOL, dude. This is Bitcoin, King fucking Kong Bitcoin. And if you're not going to concentrate here, let me ask you guys, you wives and ladies out there that like men, how do you like the diversification play? When you're jamming diversification on your husband, how do you like it when he goes to the bar and goes to Vegas for a week and hangs out with a bunch of chicks, dude? He diversifies his tallywhacky and gets a little taste of he wants to hedge his bets and manage his risk. Okay. It doesn't work. This is stupid. Okay. I don't know people that have 5 different religions.
I mean,
the story of Bill Gates. Bill Gates became friends.
Tell me while we're
with
chewing these
Warren
people up in just shreds, boy. Let's shred them to pieces.
We became friends with Warren Buffett, and Warren Buffett convinced him to diversify out of Microsoft, where if he didn't do that, he would be significantly more wealthy. However, I will give it to you guys on the diversification side. If I was living in the fiat world, I would be diversified as well, because it's nice. Bitcoin is the ultimate risk off asset. Like, that's what people don't understand right now. It's the safest asset in the world. Yet people say, "Ooh, I only want one, maybe a couple percent." No, you want 100%. Yeah, if I had all my money in Apple stock or in Tesla, and then Elon Musk crashes his private jet and the stock gaps down 50% on the day, then yeah, that would be horrifying when you're leaving it to the power of one man who can do a horrible acquisition, who can do whatever that can cause a company to lose its value, as you've seen over the decades in the market. So it's the idea of spreading out your risk in the fiat world across in an S&P 500 index. Well, I can't own one stock. What if it goes? I need to own all 500 of these and then get a shitty return. No, you just need to own. You need to risk off and just go Bitcoin.
I mean, God forbid you don't want to turn out like poor Bill Gates. Guy could barely survive because he diversified. I mean, I hope he'll be okay. I pray for him. Like, come on, Bill. And for Gary wants you to think that finance and business is like your relationship, but it's really more like fighting, right? So, like, do you want to be the guy who's just a striker against a well-rounded fighter that can bring you to the ground, knows jujitsu, can submit you, can strike, can kickbox, and can do Muay Thai? Or do you want to just have one skill set in the octagon and that takes whatever skill set you have and you're immediately knocked out because you don't know the proper way to guard when somebody takes you to the ground?
Are you referring to Bitcoin in that statement, Dustin?
I don't see how only having one skill set like allows you, right? Again, the concentration argument definitely doesn't work in fighting.
Can't win the UFC.
I would bring them into the octagon because Bitcoin's kicked the shit out of all of them, and you have no argument against that.
Until the government taxes it ordinary income when you don't even sell it, right? Because that's coming, right? Because if there's that
No
much
way,
money
bro.
being
Come on,
made,
you're making shit up now. That's
oh
ridiculous.
really?
And by the
So
way, it has
watch
nothing
what
to do with
happens.
this debate. Has nothing to do with this debate. If you said they were going to change the tax rules, we could have that conversation, but I don't think so. See, the regs.
No, but there's always tax and reg
But
risk,
Jerry,
especially in
for a guy
Bitcoin.
like you that advises, right?
Mhm.
Risk adjusted. There has never been a time in Bitcoin's history, in my opinion, I think it happened around $92,000. In this band, it has never been risk adjusted a cheaper entry based on what we know. And so if anyone was to ever look, we have Standard Charter saying they see 135. This is a very traditional 200-year-old bank, 135 by Q2, close to 200 by end of year. These are now, they're printing documents that impress and impinge upon the investor. 1% allocation. We started talking about 1%. We now have people talking about 30 and 20 and 40% allocations. I think I'm not trying to convert anyone to do anything. I'm just trying to look around and go, gosh, one, I have been most happy when I am in a concentrated position. Two, if you're not concentrated, I would really ask you to ask yourself why. Like, is it because you have so little faith in what you are invested in? But I think if you look at your life, you don't have 4 jobs. You don't have 4 skills. You don't have 4 wives. You don't normally drive 4 cars at one time. And this diversity thing it's a myth because it does nothing other than ensure now, would I want my children, if I died, to have a lawyer that's kind of moving some things around? Kind of, but I would not want him to not be concentrated in Bitcoin for at least 8 years. Highly concentrated. Don't mess with that. This is one of my worries, right? I leave, I die and move on, and some fucking advisor comes in here and starts changing the mix around. So I've spent 50 years looking for this deal, dude. This is the holy grail. See, I would love somebody to tell me why this would not be the one you would concentrate into. In fact, I offer that hook to you guys on the other side because you've gotten crushed here. Explain to me why you wouldn't increase allocation based on what we know today, and do it now.
I mean, listen, diversification and the key to wealth, sustainable wealth through cycles, through generations. We're talking family
Most
offices.
people don't have any
talking,
wealth, though, Jerry. We got to create it before we can sustain it, buddy.
Okay, so let's look at baseball. How many?
How much wealth? How much wealth? What is wealth, though?
How many people hit home runs?
Can we define a number? Is it 2 million? Is it 200,000? Is it 20 million? What is that?
Well, it's defined based on financial freedom. So I always say,
but you're using the word sustain, though. I'm just trying to understand.
Sustain.
What do I have to get to sustain?
Wealth is like oxygen. If I have enough, I can breathe. If I don't have enough, I can't breathe. I can't send my kids to school. I can't take a vacation. I can't even buy food, right? So the majority of the masses, right, they can't roll the dice. They can't be Babe Ruth. How many people are home run hitters in baseball, but how many other
Jerry, that analogy is really good though, Jerry, but rolling the dice, you would not tell anyone that has $4,000, hey, go play on 10 different casino tables at one time. You would never tell them to do that, especially the new investor. In fact, I think actually this is bad advice, dude. The new investor should be concentrated. Otherwise, they should keep their dick in their pants. Like, what are they doing?
There's an old saying, you don't take a bet unless you can lose it, right? And I don't care what it is, because we're talking about generational wealth, your kids, my kids, what's going to happen in the next 20 to 30 years. Bitcoin is compelling. I'm telling you. But if you want to go back to your kind of analogies, it's like, let's call Jack an investor who, he fell madly in love with one thing. It's called Bitcoin. And she was sexy, mysterious, volatile as hell, right? She spiked his adrenaline, drained his bank account, and every time she dipped, I had to go back and buy more. But here's the twist. Bitcoin could have been a one-night coin. She didn't call back. She didn't pay dividends. She showed up in stilettos, disappeared by sunrise, and Jack got fucked and he's broke, right? And he's praying to Satoshi. Okay. But the other guys, right? We're building penthouse portfolios. We're stacking assets. And I love Bitcoin, and it's around, I'm overweighted, right? MicroStrategies, Bitcoin. I agree with you. And it is compelling. But I'm still stacking assets because I don't know if she's going to take off in the morning and drain my bank account. And I don't want to take that risk. That's why I like diversification.
I mean,
How is that? Come on, buddy.
Hey, I hear you, buddy.
Where's
I
my
mean, it's
partner?
clear you have
Dustin.
doubt. It's clear you
I don't
have
have doubt.
little conviction.
Listen, the statistics are all in your favor. The biggest ETFs, the biggest mutual funds, all the buying in the last quarter came out, the numbers, anything that could touch Bitcoin bought it. They avoided equities, they avoided bonds, they avoided stocks. I am with you, and I play the numbers, right? I believe data wins arguments, and data, Gary and Mitch, is on your side. But you know what? I'm also the guy that says buy on rumor and sell on news. The news is here. And so it's scary. I want to buy when nobody knows about the hot chick in the room. That's what I do. But that's my style.
No one does know about the hot chick, though. Like, I mean, anytime I go to any
institutions.
I mean, I was just at a wedding the other weekend.
Up right
Do you know
there.
how many people are talking MicroStrategy or MetaPlanet or Bitcoin? It's me, and that's it. And everyone looks at me like I'm crazy. That no one is even sure. We're only 2 trillion. You have NVIDIA, Apple, Microsoft. These are individual companies that are larger than the entire asset class of Bitcoin. It is tiny, man. And right now, Gary said, like, with everything that's evolved in this space, I mean, think back from 2017 when I first got involved to today. We have a strategic Bitcoin. I mean, I could go on all day talking about the where we're at in terms of Bitcoin's maturity in this marketplace. But right now, personally, I think this feels like in this moment right now is July 8th, 2025. It feels like the summer of 2020 when Bitcoin was just hanging out at 10K, just cruising along all summer. We get into the fall and boom, we're off to the races, 10K to 60K in a number of months. So I think right now is a tremendous opportunity to buy. So yeah, Jay, maybe we will get that 50% crash. Maybe we'll go to 500K and then crash down to 250 and we'll keep cruising along.
Hi, Dustin.
The difficult with this is we always have a bunch of different perspectives that obviously change like the value of the game. So I want to touch on a couple of them. You're right. Safety. You want a really safe place, especially with what we're seeing with the government. Bitcoin has definitely evolved itself into a position for safety for people who have already made their bag. For all of my Bitcoin brothers who made ridiculous numbers of X's, I am right. Like we made it, baby. We did it. The guy with $4,000 though, he's looking for his Bitcoin. He's looking for his opportunity to make the kinds of hundreds of X's that with Bitcoin, the safety comes at a cost of limited upside. Now, when I say limited upside, I obviously don't mean that this is your traditional or that we have topped out in some way, but you're not going to see the kind of returns that my friends who bought Bitcoin in 2011 and 2013 and 2016 were able to realize. And so when we talk about absolute concentration, I think a lot of it depends on how much you have to bet. And I would never begrudge anybody who wants, like I don't know if you guys know this. I was born with a condition. So I have no risk tolerance in that, like, I literally was just born without the ability to care about risk and like love to go big. Do you not want the blood pumping through you as you bet on something that could be the next gigantic thing? Maybe it's 1 in 100, maybe it's 1 in 1,000. But the reason that Gary isn't 100% allocated is because he's still pushing and wants to invest in places that he could see opportunity. And so depending on where you're at financially, like
that's actually not accurate, but continue.
But saying all you have to do, you should put 100% of your money into Bitcoin and nothing else, I think ignores the idea of all of the unique information and possibilities and frankly risk that makes living, like for me, it makes living exciting. So
Yeah, but listen, with the right amount of money, I can buy all the excitement I want. I don't need to get all junk. I don't think investing for legacy wealth is like, that's not, I don't want to get junked on it, right? I don't want to become a junkie. And I mean, I want, like, I actually think I'm one of the most disciplined investors that I know. My brother and I are conservative, but now Grant's like ultra conservative. But for me, I study markets extremely well. I don't know of a story where people diversified and became wealthy. I don't know of an incident, in fact. What I do know is that a lot of people that have had a better understanding of this space or a bigger problem, those that did concentrate have become extremely wealthy. And I still think it's early based on how I see this whole construct of an industry. See, I think this is much bigger than the way you guys talk about Bitcoin. This is an industry now. I mean, think about this. I know, in fact, Mitch is now an advisor to a strategic Bitcoin reserve company or a group of companies. I think, Dustin, I said 3 years ago, hey, this is an industry, dude. There are going to be so many great jobs here. It's going to be unbelievable. I used to use the story, hey, somebody's still going to get me a cup of coffee, dude. That's a Bitcoin coffee maker person, though. Okay, that is an industry. People laugh at it, and I'm like, why y'all laughing? There's going to be 1 million people here. I mean, I know one company just hired 40 forensic auditors in crypto.
I mean, that was a lot of words to admit.
This is an industry, though. That's why I would get concentrated, because think about it, Dustin. I own half of Node 40. I've got some real estate. By the way, this is in response to your thing. And I've got my interest in an old legacy business. I'd get out of every fucking one of them right now. It's $400 million, dude. And I would dump it all into Bitcoin.
I
don't
funny
well on that point.
If I was telling my kids, if I was telling a 20-year-old who had like $100,000, let's say, and I said, hey, look, I don't want the 20-year-old to have diversity and have to think about shit. It just should be really simple. Hey, kid, why don't you invest that $100,000? Where are you going to tell them to invest it? And I smash it into Bitcoin and say, don't touch it. Okay, well, if you do it for $100,000, why wouldn't you do it for 50 or 100 million? It's only 8 years. Okay, and Jerry's going to tell you, yeah, but you could do real estate, dude. The moment I can buy Bitcoin fractionally is the moment that Bitcoin will fucking go up 20 and 30 and 40%. Like the moment real estate can't be acquired by by borrowing 90 cents on the dollar is the moment that real estate is going to come down in great value. Okay. Like it just makes no sense whatsoever. By the way, if you own a home, you're so stuck into a core bad position. You have literally put so much concentrated wealth in the dumbest investment in the history of mankind. So your conversations about diversity and concentration, they're stupid. Okay, because women are literally making men go buy homes, get into debt so they can go clean the gutters on an investment that literally is a piece of shit. Worst investment in the history of mankind. And y'all are all loaded up on that. So most people actually need to unwind their diversification first and actually look at hire somebody like Jerry. Hey, what actually do I have other than a load of shit? Bitcoin is a monster play. If 10 years from now, any of you guys go, well, you were just lucky, I'm going to say, fuck off, dude. Okay. I did what I was supposed to do. In fact, Jerry, you're an investor in MicroStrategy. I understand that Fong Lee and Michael, they're gonna start doing it with Ethereum now to diversify their portfolio. How long are you gonna stay as their investor? You're out.
I'm out. I'm out. I'm out.
Mitch.
I like MicroStrategy because I like the diversification. I like his financial genius. It's a way to leverage Bitcoin. right? Many different ways. I love how he floats the bond structures. I love how he pulled in institutional investors, and he's a leader, meaning he's a thought leader, right? So I always say it's not, sometimes you're not
Yeah, well, and he's
underwriting the
investing in
asset.
one thing, in
And
a
he's invested in one thing.
monster way. I mean,
Correct.
in fact,
So
MicroStrategy is taking the largest consolidated, concentrated bet in the history of mankind, and you're representing diversity, and you're invested $1 million in the MSTR.
yeah, but he also bought a
fascinating.
badass house that went from 10 to 20 million in Miami Beach, right? He's not renting his house. So, and it doubled just because of demographic population and people patterns, right? Moving to South Florida, and Wall Street's moving to Florida, Citadel, all of them. So I agree with you. I think I'm underwriting Michael Saylor and the asset class, right? Because you can underwrite 1 million pieces of real estate, right? But if you don't underwrite like the operator, and that's why your brother's so successful. That's why you're successful. If you're a well done operator, then I bet on you, because I can take any numbers, whether it's off the chain or whether it's in underwriting or it's a research report from Wall Street or Goldman Sachs. 90% is bullshit. But if you can trust the person and you underwrite the person, that's who you bet on. And that's why I chose to take larger stakes in MicroStrategy, and because of leverage and easy leverage, and I don't have to hold on chain, and I can use IRAs, and I can use vehicles that I don't have to, and I buy and sell it because the damn thing's so volatile. Technical analysis is technically the only way that I can justify how to buy Bitcoin, because there's no fundamental value, real fundamental. They don't have earnings per share. They don't have a PE ratio. It's a new asset class.
You like all those metrics, huh? They make you
love
feel good.
metrics, but listen, I'm not going to go all in and bet everything and burn the boats. That's like going to a Vegas wedding, right? That doesn't get me married for life. That gets me freaking 10X in therapy bills, right? Because that's what we do when we're in Vegas. We sell the house, we sell our business, we get married, and then we're down the road. So that's why I stand on diversification, and I bet on people like you. And listen, I do. When you talk to the masses, how you are, I do agree. There is a generational wave that is happening, right? And I always say, if you ride the wave, there could be 5 surfers, and you could be the best, or you could suck, or it's going to still push you to shore. But if you're going to ride this wave, you better know that it's volatile, and it goes up and it goes down. And if you need liquidity, okay, you may not be able to get it. And you still need fiat in the real world. So there is a way to balance all of that. But I do agree with you that there is a generational wave of wealth being created, and we've seen it for 15 years. You guys are some of the pioneers. I'm in it for maybe a decade or so. And I do believe it will continue, but you still can't get me off diversification.
That's one of the things for the normal person. For the normal person, diversification is incredibly complicated. I mean, I remember thinking about this for myself. I'm out doing corporate stuff, working all day. I come home and I have to be a part-time hedge fund manager to figure out how I'm moving stuff around, because I got some real estate, I got these stocks, I got this and that, and trying to do the right thing, the diversification thing, when and that's someone who's tuned into this. Most people aren't tuned into this at all and don't have a lot of money to their name to figure this out. However, the simplicity, which is the beauty in it, of just buying Bitcoin and outperforming everything else. Going back to the other point, Dustin, yeah, not everyone's going to be an OG and, I bought Bitcoin at $500 or whatever. Yeah, they're not going to get those returns back then to today. However, measured from today going forward, the expected compounded annual growth rate of Bitcoin versus real estate versus stock indexes, et cetera, will likely far exceed it still from this point. And it's the easiest thing to do for someone, instead of figuring out all these different funds that they need to diversify in, that's going to be sucking fees from them when they could just sit in Bitcoin for free.
Listen. I know it hurts.
Bang.
Go Dustin. Go Dustin.
I know how painful it is to be sidelined in Fartcoin, but I will try to make sure you guys get in on the next one, because it's awesome.
You know what? That's another point you brought up. It's like, what about you want to get some action? You want to get that 100x action? Yeah, I want to get 100x action. Guess what was the best performing stock in 2024 in the entire world? Oh, that's Metaplanet, Bitcoin Treasury Company. What 2025? What's the best performing stock in the world this year? Smarter Web Company in the UK, Bitcoin Treasury Company. So yeah, I guess you can diversify with Bitcoin and Bitcoin treasury companies. So I guess you got me there. I'm in the diversification camp now.
I mean, listen, hot air rises, boys. Get you some fart coin. Like it's only going up. I'm just telling you right now.
I did go to Jerry's Vegas wedding. I just want to say that, and it didn't
She
work
did
out.
go. It didn't work out. Cost me 10x in wedding bills, right? I mean, in therapy bills. It just ended. She did go to my wedding.
Gary, do you have a rebuttal to this, or Dustin?
No,
Dustin, you want to back him up?
I mean, in all seriousness, that you should have exposure to Bitcoin, right? We started out by laying that out, but there's also a cost of buying and moving Bitcoin that depending on how much you're putting in, I don't think that like everything else, there's a one size fits all. So I would love to get everybody's opinion though. Like I know Gary is as close to 100. I met with somebody yesterday actually, and as he put it to me, he gave me one of my favorite stories about Scott Bessent with George Soros, where Bessent goes to Soros, very confident in a play that he has. And Soros asks him, if you're so confident, how much are you willing to allocate like on this bet? And confidently, Bessent tells him 100%. Disappointed, Soros like shakes his head at him, says, if you were really that confident, you would hedge up to 120%. And right, so I mean, all I'm saying is I haven't heard Mitch and Gary trying to tell you yet that you need to leverage up and go above 100%, which I think tells you that they lack the kind of confidence necessary to make the all-in argument here all the way across the board. I am curious though, because we have a lot of really smart people here. Really depending on where you're at in the investment cycle, Bitcoin should be seen as your nest egg, like as the nut, as your most protected, right? With serious upside, like piece of your diversification. But I'm going to make the same argument to finish that I started with, which is even for like my Bitcoiners, I think it's really important for us not to withdraw from the rest of the economy and figure out how we bring the power of Bitcoin into other markets in order to improve them. And I think what Saylor is doing with Master, I don't know that I would call that like concentration. I think what he's doing is he's bringing the power of Bitcoin to the world of financial instruments, which is improving financial instruments. I think what Gary is doing with bringing Bitcoin into real estate isn't concentrating into Bitcoin. It's bringing the power of Bitcoin into another industry and another asset class. And I think that whether or not that counts, I don't think that's concentration. I think that's spreading the power of Bitcoin to make everything better money, better financial instruments, and better investments.
The biggest thing on top of that as well is the fixed income market that he's targeting in his preferreds, STRF, STRK, STRD, now as a class for everyone. You want the crown jewel, STRF. You want junk bond like exposure, STRD. You want the hybrid, STRK, giving you that, well, at par value, it's gone up in price, but at $100, that 8% qualified dividend hitting your account every quarter, with a 10-to-1 conversion to MicroStrategy after it goes up over 1,000 shares. So it's by far and away the best inflation protected fixed income product in the market. I don't know why anyone would own real estate, rather just buying STRK.
So Gary has said 110%. He has said 110%.
And yeah, we could go down that route, but frankly, I don't know if it's responsible to discuss here.
There's a little
Sure
bit
beats Steve.
on Mitch's side. It might be you.
It's not me.
Tell me what happened to all those people that went 100x on all those offshore platforms 4 years ago on Bitcoin and the leverage. How many of them are still standing?
Yeah, but in fairness, okay, that isn't, first off, you guys that went into FTX.
They went all in.
Hang tight, okay? That's way over all in, okay? That's not all in. That's insanity, man. I've never done a 40X, okay? Like I was in a position once, I was down $120 million in 1 year. And I'm in Rome. I called, we've reached every risk VAR fucking metric you could possibly change. I mean, we just kept moving the damn goalpost. And one Friday night, I get a phone call from the CEO, COO, CFO. The board was there. And the CEO said, hey, let's double it, dude. Let's just go smash that motherfucker. He hate taking losses. He's like, let's go do it again. And like, I would be the guy that would do that. I mean, but I was like, bro, this is wrong. We need to close this position, man. I was wrong. I should have been out of it some time ago. Now that saved the business and my career, because had I not done that, we'd have lost $250 million. And the play was not wrong for me. Okay, I wasn't trading electricity, natural gas, FX, and crude, and this and that. Dude, I was trading nat gas and power, highly correlated. But I actually diversified my management style. I had all these people at 40 years old going, you need to let more people make decisions. And I did. I let people make decisions, and I took my ear off. I literally stopped doing what I'm brilliant at, which is concentrated on very small number of things that I pay attention to. And I talk to lots of people, get vibrations, and that allows, and the vibration I get from Bitcoin, the information, you make fun of me if I call it a vibration, but the information I get is like, oh my God, man, this is I would literally, I mean, the last time we did this, I sold my 401k to fund the business. $46,000. This is the last $46,000 I had. I didn't even think about dumping it, man. Like, I'm so deep, and that was building a business that became worth $500 million. I think that's what building businesses is about. Like, this is the struggle you go to. If you want to work for somebody, and you're going to work for somebody for 20 years, which I think is cool. I made a lot of money working for a company, helping build it. But once that was over, which, by the way, I was 100% in. I had all my money in that company, and I had all my hours and all my relationships. I had a double. This is why people retire at 50, 60 years old and they don't have anything to do. Because like, yeah, dude, you literally concentrated your entire life, not your bank account, but your entire life into one little puddle. That after 10 or 15 years, these cycles are getting so old, the industry that you get rich in is no longer even relevant. So I think if you really look at concentration and the investment is a concentration, I'm going to look at this exactly the way I look at my life. I don't have 32 girlfriends at one time. I don't. I cannot communicate with my children all at one time in a focused way. I need to spend my time with one kid at a time. They're different. We're not doing a podcast on 32 different comments right now. We're doing one debate. And that's where we run into problems when we start diversifying all these conversations, because they get conflated. Jerry, you most certainly, anybody that's not, I don't know what kind of concentration you tell people to do, but what is the concentration you tell people? Like, what is too much? Is 10% too much? Somebody's got $1 million. Is $100,000 too much to go into Bitcoin? And Mitch, your thoughts.
Our normal rule of thumb, like on one asset class, depending if it's real estate or others, Bitcoin, I mean, the most levered people we have, or we know, maybe 22%, 25% in Bitcoin. And that's a heavy asset allocation. Now, I do agree with you, Gary, meaning like there's an old saying on Wall Street, right? Winners know when to take losses, right? Because and that's exactly what I heard and what you did. But I've also mentored a lot of people in business and had a bunch of exits. And the biggest distraction in the business world is when someone has too many businesses, right? So today, 90% of my revenue is based in the world of insurance and real estate profit, all that crap, right? And when I had too many distractions, I could never get to that greatness that you're speaking of. So I agree with you. If you want to hit it out of the park and you want to live a life of real wealth,
let's
real
cut
financial
this. This will be
freedom.
cuttable. This is the way we promote this. Say that again there, Jerry.
Right. So, I mean, if you want to live a life of real wealth and financial freedom and a legacy of generations, correct. I would advise any entrepreneur that's trying to scale to focus on one expertise, one business. You have a God-given talent I was sitting in front of Gary Vaynerchuk in Philadelphia, right, at a conference. I was trying to learn shit, and he's laughing at me, and I'm laughing at him, and he looks at me and goes, "What are you laughing at, man? This guy with the big Russian head?" I said, "You just told all of us to stop doing what we're no good at and focus only what we're good at, right? And go all in on what you're good at. And that's how you get to greatness, financial freedom, and an expert." And then he's like, "Why are you laughing at me?" I go, "I'm at a self-improvement conference trying to figure out what I need to do and improve." So I do agree with you. If you want to, but again, you said the number, 3,000 something billionaires. And yeah, they play that game. And Gary, you play that game. Your brother plays that game. And it's obviously you have success. Otherwise, I wouldn't know you, and we wouldn't know all of you. But I'm telling you, the masses, they can't do it. They have too many things that creep up on them. They have bills to pay. They got health care. Somebody gets sick in their family. They need liquidity. They're stuck on 9 to 5 fixed incomes. And that's what I try to change their mindset, right? But the masses, they can't go all in on one asset class. They can't, and they do. That's how stupid they are. Like when they'll pick a job, right? One job that makes them $30 an hour for their whole life, right? They're stuck because they don't diversify and they don't get out of their comfort zones and they don't explore. So for the masses, listen, you're in the top 0.5%. You know that. You're in the top 0.5% of the world with your income level, your smarts, your everything. Everyone here. That's what the real numbers show. But the masses, it's scary. It's scary if they go all in, even though by the time I'm done, I'm going to go all in, right?
So Jerry,
I want to hear what Gary has to say. Oh, Dustin, you first.
real quick, because Jerry said something that's important, which is you also need to invest in the money you invest in Bitcoin. You need to be able to hold it like to the promised land. That there is, right, whether that's 4 years or 8 years, right? If that's money that you need to pay your bills with, I think a lot of us would suggest, right, that there is still the potential for volatility that like you have to take into account. We all agree on the long-term upward like projection of where it's going, but there isn't a person like, no. How many times has Gary told us 4 8 years is the promised land window as far as what you're putting in? So that you also do have to take that into account when you're talking about like just going all in and concentrating. Like we all agree that people need to be able, they need to put money in that they can hold it through the volatility so that they don't panic sell at the bottom and then rebuy it when it comes back up.
100%.
You got to treat it the same way you treat a marriage, buddy. When it gets tough, you don't just bail on it. So, I mean, Dana didn't show up yesterday. What we miscommunicated. What am I going to like? Oh, okay. Made a mistake. See you. Bye.
Yeah,
You can come work for me, Dana.
I'm so happy. No, I'm so happy that Jerry. I'm so happy that Jerry. See, I love doing these, Mitch, because the more you do them, if we debate these properly, everybody will be, hey, I think I need to allocate more, or you don't. If whatever. But this is every time we have a proper discussion, I see somebody, especially the older guys. I say, hey, you know what? I'm gonna relook at it. If they can get past the ego of, oh yeah, you know what? These are good. Look, literally, it is. People should ask themselves, don't listen to these diversification concepts. Okay, they're without thinking about how do you become great at anything. I just don't know people that have been. Look, the other thing on Elon, you ain't Elon, nor am I. So I won't invest in companies of Elon's because other than Twitter, and I'll commit my time here, because I don't think anybody can run 5 companies. They can't. It's too much risk for me. I have the opportunity for the first time in my entire life to invest in something that could make at least 12% a year forever with 0 human error risk. 0 human error risk. That is phenomenal, dude. And it's a shorter investment thesis than any real estate position I could do, any company I could build. Okay, any, I ain't exiting anything in 4 years on a new build. So being a guy that like, do I really want to work 18-hour days getting on jets all the time to make a 10x or a 50x? Okay, I'd actually prefer to make 12% a year. I go to bed every night, dude. I am. The fucking feds come after me. I'm like, I'm just happy as a pig in the mud. I get to read more books. I get to meet people like you. I get to do some painting. Maybe I meet a chick one day. We go on a holiday. I go fishing. I hang out. I do whatever the fuck I want. Instead of worrying about going to meetings, talking about, well, let's see now, how are we going to handle the HR issue here? Like, is that the way you want to live your life? Mitch, why don't you close it up? Let's just tie the bun on this thing, rip these guys' brains out of their bodies, and just put them to bed.
I mean, it's on the diversification front to counter some of your points or discuss your points. Obviously, one's level of knowledge of this asset should correlate with their positioning size. Because if you go all in and you get that 30%, you go all in on January 1st, the tariff war hits, boom, you're down, you get scared, you sell. Yeah, that then you lost money holding Bitcoin. But now with what's being built in the space around it, because the conversation, it's just crazy how fast it's evolved. It used to be only about Bitcoin. Then it became MicroStrategy. Now you have the preferred stocks. Now you have the derivative products that are built off of MSTR. You want high yield, go buy some MSTY. You want leverage MSTR, you have MSTX. You want high growth, now you have these smaller plays where you can get action. So as long as you're building on top of Granite, the Granite being Bitcoin, there's other ways in which you can go to scale down that risk in preferreds like STRF that you could use as your high yield savings account. But to diversify that and say, oh, you know what, I need some cash flow. I'm gonna have my Bitcoin, but I'm gonna go buy some real estate as well. You don't need to do that anymore. There's products built on top of Bitcoin. You could stay within the ecosystem and scale it across different percentages of your portfolio for the amount of risk you're willing to take.
Oh, it's almost like Mitch likes to diversify just as long as there's some Bitcoin backing on it. Weird. I appreciate you making our closing argument, though. Cheers.
Actually, see, I would just say
that was great.
Against Mitch, I would say, hey, I think Mitch is now adding risk. See, I like for me, I just get you into Bitcoin first. To me, it's like I own some MicroStrategy. I own some leaps on MicroStrategy out 2027, I think. I would have been perfectly comfortable just putting it in Bitcoin. I think it actually probably would have performed better. I own a shitload of miners. I've made probably 90%. It's not a good investment, man. Risk adjusted, not a good investment. It's literally made more money than Bitcoin, but because of the entry point I went into, but I have duress over these investments. Okay. Now I have to figure out, when am I going to exit? Now I've added another complexity to my portfolio. I no longer control my exit. I'm worried about the cycle on miners. Okay. And Bitcoin doesn't require me to do that. I go, bro, I'm into Bitcoin every day. I'm buying more. I will have more in 4 years. I will have more in 8 years, and I will be extremely rich. My goal is to get in the 0.01 tenth of 1%. Why wouldn't you want to be there if you have an opportunity? Like literally, why wouldn't you want to be there? Okay. Like there's more risk over here. I think I don't want to be down here, man. In fact, I want Dana up there. I'm worried about anybody around me that's too far on that seesaw. You're going to fall off, man. So this is a life or death thing here. We're going through an event here. And if you're straddling two worlds, I think you're going to piss on today and you're going to fall. Like you're literally going to get, you're going to have, okay, I made some money in Bitcoin, but and by the way, I'll just end with this. Does anyone know anyone that invested in the last 10 years into anything that outperformed anybody that was in the same portfolio, same amount of money in Bitcoin for the same period of time? I know no one. No one, including the NVIDIA boys.
What's
Hindsight's 2020.
So
that's the beauty. That is
That's the beauty.
I get to look back
But
200 years and go, wow, I've seen
yeah,
this system fail over and over and over again. And we have monkey monopoly money over here by
right.
the weirdos. So
No, I get it. I'll finish with this because I've said this
we won.
before.
Mitch, I'm just going to
If
say
you
we
don't,
won this debate.
yeah, well,
I think
hold
so.
on. I'm going to finish it, Dustin. I think you should take us home, right? And then you can, but here's the thing. Everything is timing, right? There's always a wave in riding, and I can't figure it out, and I don't think the masses do. I will tell you, your conviction, Gary and Mitch. Listen, I was going to put it on the balance sheet of this company, and my CFO said no. I thought about it last year, and if I would have, shit, we'd be very satisfied today. So for me, I've said this before. I call it like the financial fuck me, since you guys speak like this on this channel, and so do I. I don't need one asset, let's say, to blow up. I need all of them to moan for me. I want real estate grinding out cash. I want stocks teasing me with slow dividends and climaxes and equity and going up, with the institutions and the S&P. And I want crypto riding waves that make me beg for more, just like this debate. Okay. But diversification isn't safety to me. It's seduction, and it's every asset whispering to me, Daddy, come here. And that's what performs. And I'll leave it with that.
All right,
So
thank you,
I
guys.
think we need to come up with the poll question. Like Gary wants to declare victory. I'm not gonna lie. I feel like Gary won Jerry over to his team, but I think I brought Mitch over to my team just by adding that you could diversify within Bitcoin now. So I don't even know what's going on here, except that me and Gary are winning. So we'll call it like Jerry.
We-
Energy's a trap.
We're
Energy's a
putting the
trap.
poll up. You guys all need to remember to vote. Who won this debate? So go over to Gary's Twitter. You can vote there. Please come to the next debate on Tuesday at 5. Thank you guys for coming to Cardone Debates.
And recommend topics for next week.
Yeah, we need some recommendations, guys. Hey, Jerry, thank you very much. Mitch, thank you very much. Dustin, as always, really appreciate your input. Cheney's in the background doing her deal, making this flow smoother. And Dana, you're awesome. Thank you very much. Dana, did you notice how many cool comments
Thank
there
you.
are about you? People are starting to like you. See, when you come out of the closet, people can get to know you, and then oh, wow, we like her.
We'll give them some time. You
Get
guys just wait around. You might change your mind.
You guys follow all these great people, okay? See you guys later.
Thank you so much. Great fun. Good stuff.